Business, wealth, and strategy, where smart entrepreneurs build lasting wealth. Welcome to Business and Wealth Strategy, the podcast where smart entrepreneurs build lasting wealth. I'm Karen Newton, and today we need to talk because the markets are in free fall. Headlines are screaming recession, and emotions are running high. But here's the truth. Now is not the time to panic. It's the time to plan and position. This episode isn't just a market update. It's your strategic playbook for how to navigate a falling market with confidence. So whether you're in shares, crypto, property, or building your business, let's walk you through what smart investors are doing right now. But let's start with looking at what's really happening. Money is moving fast. Last week, in response to Trump's Liberation Day, we saw Meltdown Day, and it's continuing. Initially, capital flowed from the markets into gold. That dropped, so money went into Bitcoin. Today it's shifting again as traders and investors try to find safe havens for their investments. That's a signal. This isn't tactical repositioning. This is panic. Tariffs imposed last week were the spark, but let's be clear, they're not the cause. The cause is overvaluation, inflation, and economic fragility. That's been building for months. Tariffs just lit the fuse. What we're seeing now mirrors what happened back in the 1900s after the pandemic. There was a boom time referred to as the Roaring Twenties, then utter chaos as the markets collapsed in 1929, leading to the Great Depression. Fast forward to 2008 when the credit crunch happened, triggering another deep recession. Nothing was exempt, and even property was affected. Back in 2008, mortgage lenders invoked their loan-to-value clauses, and landlords were wiped out overnight. What starts in the market quickly flows into business and property. This is the early stage of what could be a deep recession. Now, this is where the mindset comes in. See, traders panic. They've lost a lot of money. They have to cover it. Investors plan. They're aware that markets go up and down, and so they are prepared to ride the wave. I have a graphic I created several years ago showing the difference between a trader and an investor, about the mindset of both, how one follows markets, how the other is contrary to markets. Investors create, and they create the opportunities for traders. When I shared the stage with Sharon Lechter, co-author of Rich Dad, Poor Dad, and she saw the presentation on investor versus trader mindset, she asked for a copy. She saw the power in it. A trader reacts, an investor rides the waves. Investors create, buy strategically, hold quality, and don't get swept up in the noise. And that's what I want for you. Remember, panic creates opportunity, but it's only opportunity for those who are ready to take action. Now, there are 4 key assets that I cover and I teach, for a better word, teach. And those four asset classes are digital assets, such as shares and crypto, commodities, such as gold and silver, property and business. And what we're going to do is take a look at some of the strategies to position yourself to thrive and grow through these uncertain times. Number 1, shares. Now, in particular, I want to talk about monthly income dividend shares. The best strategy for today is controlled price cost averaging. Now, you've probably heard me talk about price cost averaging, PCA strategy, but I want to do a variation on that called controlled price cost averaging. And I use a 75-25 rule. That means 75% of the investment pot is used to buy more as the price drops, and 25 is held in reserve for deeper dips. This is different to the standard PCA as it allows flexibility and builds cash reserves. Now, while I use a 75-25 ratio, you can apply what you think is appropriate to your pot. You might go for a 60-40 or a 70-30 or even a 50-50. That's very much up to you. The thing is to plan this out using controlled price cost averaging so that you're putting some of your money into cash reserve, and then you can swoop in and take those opportunities as they arise. Now, here's a quick story I want to share with you. I used to invest in Laura Ashley, a UK company. It paid big dividends, 15-16% returns. It wasn't monthly, but it gave dividends 3 times a year. And I started buying their shares at 47 pence. And then the company went through a lot of changes and the price dropped. So I put PCA into place and I kept buying. What that did was brought my average cost for the shares down, but it also increased my dividends because I was able to buy more shares. Now, the share price kept dropping, and most people said, you've got to get out now. But I kept buying, and the price went down and down and down. However, there was a little bit of a recovery. And during that recovery, the share price went up to 19 pence. And that was when I sold. And I actually sold for profit. Not because the share recovered, but because I averaged down and collected income. The shares owed me less than the 19 pence. And that was how I was able to make my profit. So my advice here, and please, I've got a disclaimer here, I'm not giving financial advice. Please, if you have a financial advisor, use them. But review your portfolio. Now, if you've got profitable positions, sell them, take the profit, have the cash so that you can go in and rebuy lower. If you've got losing positions, hold and use PCA to bring your average down so that as the shares recover in the future, you can make a profit. Don't sell out of fear. Don't sell because that's what everyone else is doing. Number 2 is crypto. Now, with crypto, I treat it as I do shares. I will apply the same 75-25 rule. I will be a little more cautious on some of the shares I buy. Bitcoin, which has been mooted as digital gold, isn't quite there at the moment. It moves like high-risk tech stocks. So, yes, put Bitcoin into your portfolio. Put some of the other big names like Ethereum, Solana, XRP, put those into your portfolio, but avoid the hype coins. You know, the meme ones that have got all those millions of zeros in front of them and you expect to become a billionaire in them. Treat it as speculative and be very cautious with your buying. My third asset, gold and silver. Now, gold is still a safe haven. It's down at the moment as traders are chasing money and trying to make something to cover their losses. Now, normally I would recommend buying physical gold and silver. But at the moment, the premiums are just too high. So I would use a strategy of buying through ETFs. Silver's more volatile due to its industrial ties. So I'm holding on silver. I'm not selling at the moment. I'm not buying at the moment. But if it drops to 28 or lower, then I'll be reaccumulating. Property. Now, this is where the 2008 lessons really hit. Property has in the UK started to turn. We've seen the signals. That comes down to what the government policies have been, the budget, and there's a lot of changes coming in on the property market. However, if you have buy-to-let mortgages, I urge you to check your loan-to-value clauses. That's the LTV clause. And put a plan in place to start bringing the mortgages down so that the margin increases on your loan to value. And what I mean by that is that if your loan to value is 85%, then bring the mortgage value down, bring the loan value down, and increase that margin that you have. Take it from 15% to 20 or 20 to 25%. In a normal recession, property prices will drop up to 20%. If it's a deep recession, then mortgage prices can drop up to 50%. And you don't want to put yourself in the position where loan to value clauses are enacted by the lender and your property becomes repossessed. They particularly hit the buy-to-let mortgage market to reduce their exposure and to get your debt off their books. And the fifth thing I want to talk about is business. Now, your business funds your lifestyle and your investments. In volatile times, focus on cash and net profit. Go lean, go online, embrace AI to cut costs, automate where possible, and position yourself to scale. Cash generated through your business is the key to being able to use all these strategies that I'm showing you. Cash is king, and profit from your business funds those opportunities. So let's look at how all this connects. Your business funds your portfolio. Your portfolio is diversified across shares, crypto, gold, property, cash is your ammo. Don't think of it as dead money. Think of it as power waiting to be deployed. You're not just an investor. You're a strategist. And right now, that means holding steady, buying smart, and watching the waves with intention. So where do we go from here? Well, first, hold your nerve. Don't follow the crowds. Invest through strategy, not fear of what the crowd is doing. Have a plan and work it. This isn't just about surviving the downturn. It's about positioning yourself to thrive on the other side. If you want to go deeper, check out the blog version of this episode or join my Zero to Millionaire coaching group where we talk in depth about strategy and how to position yourself, put those plans together and build for the future. If you go to courses.karennewtoninternational.com, there is a quiz. Take the quiz and it will help you decide which of the memberships are best for you. There's the online entrepreneur membership for building online businesses with AI. There is Zero to Millionaire, which is all about getting the basis, the building blocks of investing in place. And there's the KNI Mastermind, where we joint venture and do a lot of strategy. So until then, stay strategic, stay calm, and remember, smart entrepreneurs don't panic. They plan and position themselves for growth and prosperity.